All right, morning, everybody. Red, your mic is live. Give me a second here, everyone.
Double the holiday cheer with a gift for them and a gift for you.
Sorry. Give me a second, everyone. I'm sorry. I was at work last night, so I'm literally just walking in the door and trying to get everything ready. All right, so we're going to start with ES, and I'm going to wipe this chart so we can start from a clean slate. So today I'm going to be doing mostly just watch list. It's going to be short because I worked last night and I pretty much ran my butt off for 12 hours straight, and I have to go back to work tonight. So I need to get some rest. Um, but we'll go through ES, we'll go through NQ, and I don't know from there. I might do QQQ, I might do SPY if I'm feeling it. And then after that, I might take a couple of requests. If I do take requests, it's just going to be from the Discord. It will not be from YouTube. Um, so I know in Discord we have a lot of new people, um, and potentially on YouTube. Um, I don't know that we do or not, but uh, sorry, give me a second. That looks good-ish. Um, so for newer people, when you're looking at this, you should be, looking at market structure. And I'll just pose a quick question: are we in an uptrend or a downtrend? Uh, I'm on a 3-day chart right now. I'm kind of cheating. Um, so everybody should understand market structure. You're looking for, like lower lows, like here, um, higher high, higher low, higher high, lower low, lower high, so on and so forth. Um, so short term, yeah, we're in an uptrend. But if you look at, like a bigger picture, even if we were go out like a month out, we are definitely in a downtrend. Um, I don't think this is going to be a good trend line here. I know it looks good on the daily chart, but you always want to zoom out, um, and look at the big picture. Currently, we are in a downtrend, at least on ES. Um, and, right now we've got a little upwards momentum. Um, so normally I'll start like on the month, and then I'll go to like a weekly chart, and you want to identify patterns. Again, I think this trend line looks better on the daily, but I'm just checking to see. Shorty's pretty good about eyeballing it. I'm not, but I'm definitely not on his level. So let's see. I know I had a good trend line here at one point. I think this is it right there. Yeah. So touch, 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 slice through a little bit here and a touch here. So this is a pretty good trend line for our downtrend. Playing the tops and bottoms, uptrend. This looks good on, I believe this was the 3-day. So we're looking to come up here or possibly down to here. Um, but so this is just looking at the bigger picture. Uh, then with volume profile, um, I generally always start on like the 4 hour, and I will go to PVP, uh, and I'll show the indicators just, for people. So PVP, periodic volume profile. Um, with PVP, and I'll go over my settings as well. Value area, we do 68. Row size, we do 100. Uh, and I look at two different time frames or periods on PvP. I look at well, actually, sorry, I look at three. I look at 12 month, I look at 1 month, and I look at 7 days. Right now on the 4 hour time frame, I start on the 1 month. And normally, like the 12 month, I only do that when I'm starting with like a clean chart, which I've done. We'll do that in a second, but right now we're going to look at the 1 month. And what I want to do is get the previous month value area high and low, and POC. And then this is up here. I'm trying to zoom in, so you guys can see it well, but up here, this is going to be our December forming POC. And normally with the monthly value area high and low and POC, I'll start plotting this on my chart, when we have like a week or so left in the month. At that point, it takes a lot to move the value area high and low and the POC. It actually did do it this time for November when we had this huge upswing. And again, this huge upswing here was able to move the value area, but normally towards the end of the month, you don't see them move too much. And then, so I'm going to be going over, levels for tomorrow for trading, but I'm also going to teach as I'm doing it. So I use this horizontal ray. I use 2 points because it lines up with the size of the lines from the volume profile. This is irrelevant, but I'm kind of anal. So for the top, I use purple for my value area high. That way I know exactly what it is at a glance. And I'll put, I always label it. And then for the bottom, I use green and label it and then my POC is going to be red, and again we'll label it, actually, and this is a VPOC. I'm not going to go into the difference between a VPOC and a POC too much in depth, but I'll go over it really quickly. POC is the point of control, and that's basically the area on the chart where the most trading took place on a given time frame. So on the 1 month, this red line is where the most volume of trading took place. Our value area is where 68% of the volume took place on a given trading period. So for this month, this highlighted area here is going to be our value area. The difference between a POC and a VPOC, and again, I'm going over this really quickly because I want to try to cover as much as possible as far as levels for trading and not so much be focusing on the teaching. I will be doing some more in-depth classes during the week while Shorty's gone. So I'm going to try to cover it, but again, not too in depth. So for VPOCs, basically, when the volume profile is being formed, so this one's very large because it's November, the POC can be touched as many times as it wants. But once the month of November ends, if price leaves it and hasn't come back and touched it, this becomes a virgin POC. Once this gets touched, after it's formed, then it would change to just a regular POC. And there is a pretty big distinction. Virgin point of controls and POCs both act as magnets for price, but you'll notice like if you have like, I don't know, we'll say like 5 virgin POCs to the upside and 1 to the downside, you're more likely to see upward movement on that stock than you are downward movement, because the price is gonna gravitate towards those virgin POCs. And again, in trading, nothing's 100%, but for the most part, um, price will probably gravitate towards the area where we have the more virgin POCs. And virgin POCs are about 10 times stronger than a regular POC. So sometimes I will do like, the October value area, but right now we're so far away from it. This is not a concern for me. So from here, I drop down to the 65-minute time frame, and I switch my PVP to 7 days. And you guys are going to see me do this on a lot of charts. Oh, and I wanted to call out the levels just in case anybody's having trouble seeing it. So my November value area low is at 38.48. And if you want it to the penny, it's 38.48 and 38 cents. My POC or VPOC 39.59.35. Value area high is 40.43.16. This will help like if you want to play it back and put in the exact levels. And I should add like for TradingView, you have to have a paid account to get the volume profiles, and you're gonna want live data, NYSE, ARCA, and NASDAQ. And if you want futures, you're gonna need CME group. So if you want live data for ES and NQ and all of that, you're gonna need the CME group as well. And then an important thing to notice here, when I switch to a lower time frame, so like if I go back to my monthly here, because I do get this question a lot. If I go back to my monthly, oh, it actually didn't really move. I mean, you can see slightly the volume profile moved based on the time frame. Like if I drop to a much lower time frame, that's probably too low. If I go to like 30-minute, so here you can see like the volume profile in 30-minute is actually different than it is on 4 hours. But so for drawing purposes, the 1 month you draw on the 4-hour time frame. When you switch times for tradings, or for trading, I'm sorry, those levels are still going to be the levels that are respected, even though the volume profile moves on lower time frames. So, like I said, from here I go to 65-minute, and I switch my PVP to 7 days. And from here, like my main concern is the previous week. You can also chart, like your current forming week if you want, but my focus is just going to be my previous week. And notice right off the bat, our November VPOC actually lines up with the weekly or the previous week POC. You can't see it, but there's a red line under here. And so when I run into something like that, for my label, I just put a little dash, and I will put PW for previous week, and then VPOC.
I mean
Actually, it's
PD7, not previous week.
not a VPOC. I'm sorry, I can't hear you. What did you? Oh, let me turn up my volume.
I said you meant PD7, not previous week, because you did 7 days.
So that's how I do my weekly.
Oh, okay. Okay.
So, like per shorty and from my back testing, for previous week, you can do 5 days or 7 days. You could do 1 week, but we found that 7 days um, tends to give better, like more accurate results than 1 week. So yeah,
Okay.
what I'm saying is not an error. I know I've put 7 days, and that's for 1 week, which for whatever reason gives us better results than 1 week. You can see my POC, like shifted way up here. The values are completely different, um, and it's not a mistake, I promise. But um, if you don't like something, or if you're not sure, you should always go and back test things yourself. Um, and find out where, like, if you think the 5 day values are being respected more than 7 days, then you should use 5 day values. Or if you think 1 week is respected more, then you should use 1 week, or whatever the case might be. So I'll call out my levels on the previous week in just a second here. So previous week value area low is 39.44 and 28 cents. My previous week POC is the same as in November, but it's 39.59 and 35 cents. Previous week value area high 39.97 and 93 cents. And then from here, I drop down to the daily, and for the daily, I use 30 minutes. And I don't use PVP. I use the session volume profile. And so this is going to be my previous day here. And then actually one thing to notice, like for futures, you have extended trading hours on. If you're looking at anything other than futures, you're going to turn extended trading hours off when you're finding these levels. I do. I'm a level of tired that's just not even kosher right now. All right. And then on the daily, your POC is always going to be a virgin POC because price hasn't had a chance to come down and touch it yet. Hopefully that makes sense. If it doesn't, let me know. All right, so those are going to be my most important levels as far as um, like our fixed range volume profiles. Um, I do go out as far as a year or even sometimes 2 years, depending on where we're trading. And then from here, I'll start looking at fixed range volume profile. If Shorty said this probably a million times, but um, if you're looking at an uptrend um, with your fixed range volume profile, this is going to show us where buyers are showing up. So it's always good to have like your wow, and look at this level. This is insane. So this is our November POC, previous week POC. And it's also the run up. Yeah, I can post the chart after. So this is just a nasty, insane level. When we come here, we should see a good bounce. Our November POC, previous week POC, and run up POC. So again, when you're using fixed range volume profile, actually, I should go over the fixed range volume profile settings really quickly because this is important. You want to make sure you do not have extended right turned on. If you do, what happens is I'll show you an example. Like if I was to grab this range here and then I turn on extend right, what it's going to do is instead of taking the range that I selected, it's taking the beginning of my range all the way to the right. So it's grabbing all the data from here forward and not the data that I actually selected. Hopefully everybody understands that. Same thing again, row size is going to be 100, value area is going to be 68. Extended right turned off. This stuff, it's up to you if you turn it on and off. You can turn on the developing POC, developing value area high, value area low, POC, change the colors if you want. There's nothing here that you can't adjust. It doesn't matter. So that's our fixed range volume profile settings. So again, when we do the low to high in an uptrend, it's going to show us where buyers are stepping up. And this is a P shape. And so a lot of times with a P shape volume profile, like if we were to break through this November VPOC, the next area that we're going to look to be buying is going to be this volume shelf here. It's actually kind of a big one. I don't know that I would grab that much data, but maybe something like this. You're going to be looking for buyers to step in at the next high volume node in a P shape. So, and that lines up with our November value area low. We would be expecting a bounce here. So just kind of going along again with the education portion of this video today. So I want to grab this run up again. And just grab my value area low, value area high. And then I'm also going to do the run down. Right now in this minute, I'm on 1 hour Angel. Sorry, I'm trying to verbally communicate everything. I'm probably not doing the best job of it though. So right now my rundown value area low is going to be at 37.63 and 49 cents. Sorry, why did I say run down? This is run up. And the POC is again right there with November VPOC. So 39.59 and 35 cents. And then our run up value area high is at 40.44. It actually also lines up with the November value area high. So
I will. Hey, do.
Yeah.
Question. Do you prefer to play 80% on the run up and run down value areas as well, or you stick with the weeklies or monthlies and dailies? Stick over 80%.
Oh, I mean, I'll play it on any of them, but oh shoot, did I delete the right one there? Yeah, I did. Okay. Um, I'll play any of them, but with, like if I'm playing SPX, and let's just say, price comes up, crosses above my value area low for the run up. Oh, I picked the wrong. Sorry. So we cross above, right? And we're looking for the retest. We come back down, retest the value area low, and bounce. Um, and let's say I'm playing ES, like I'm not trying to get um, this move. Like I'm not looking for a 300-point move on ES or on SPX or whatever. Because, well, I'm sure, people that are familiar with SPX. I mean, I guess you could buy like a really like out the money contract, but you're kind of like playing a lotto at that point. Um, and go like a month or two out and hope that you catch this whole move. Um, but there's a chance, you might end up rejecting somewhere else and 80% rule doesn't play out. Or, like let's say our run up POC is here, for example. Um, like at that point, there's a good chance you reject here. But are we going to shy away from taking like a 100-point move on SPX because the run up POC is here and there's a good chance that we're going to hit that and reject down? No, we'll definitely take 100 points on ES like any day. Um, but to get like this whole move, you would have to take contracts, pretty far out um, to catch the whole move. And I'm more of a scalper day trader. I don't do a ton of swing trades. So
I was not talking about the swings for scalping only, like 0 DTE, but essentially 80%. I didn't mean to say that you take 80% all the way to POC or up to the value area high, but essentially just taking the trade on a run up rather than a previous week, previous day, which is more defined time frame. Was my question, but I got my answer. Thank you.
yeah, so I mean, I'm gonna play it on any cross of like a value area high or low. Um, yeah, I'm gonna be looking to take the trade, but as a scalp. I'm not going to be looking for the whole move. Whereas, like on session volume profile, I will look for the whole move if possible. I'm generally looking to, like, let's just say, hypothetically, I took two contracts of SPX, and for me, there has to be enough meat on the bone, from when I cross whatever value area until I get to the POC. But as I'm approaching the POC, if I have two contracts, I'm probably trimming one and leaving a runner, seeing if we're going to do the full 80% move. Um, and a lot of times, we might, or whatever, 20% of the time, we might reject at the POC and not get that full move from one side of the value area to the other. And then, like once I see downside on that, that last running contract, I'll cut it, and take my profits. If I have one contract, I generally will cut it at the POC. Um, sorry, 1 second. All right, so hopefully that answered the question. Um, did I do the session volume profile? I think I did. Yeah. Okay. So from here, I want to look at the rundown. I might have to use a larger time frame. So this is going to be, our most recent rundown from here to here. So this is the more pertinent information. Um, and when you're looking at a rundown, that's going to be where sellers are showing up. Um, oh yeah, sorry, Chris. I can't really control other people's mics. That would require like a recording studio for me to do that, and it's just not possible, unfortunately. Sorry. I know Angel has a pretty loud mic, but he's an old dude, and I'm not going to try to get him to adjust his mic volume because that would be a headache. Love you, Angel.
So
I had enough trouble trying to teach him how to trade. I'm not going to try to teach him how to adjust his mic volume. Oh, if you know a wave end, let me know. I don't know of a way to turn other people down without turning myself down. All right, so these are going to be, like our most relevant levels for the near future. I'm going to show it just because I like to look back much further. And I'm going to show some tricks really quick with TradingView as well. Line up with our teaching aspect of this video. So the PVP doesn't have like a 1 year, so I use 12 months. So this is our developing value area high and low and POC for 2022. These values you can actually use because we're so close to the end of the year. It's going to take a lot to move them. So we'll grab these really quick. And they're also pretty relevant to where we're trading right now. Like we're getting close to these levels. And would you look at that? Our POC for the entire year, or VPOC, lines up pretty close to our November previous week and run up, which is just insane. I'm going to run out of space here. Actually, I might just go to another line. Um, so yeah, I will go as far back as a couple of years normally. I don't really use visible range very much, Angel. Don't really see a need for it. Other people might like it. I don't. I would rather select the exact range that I want, based on time or whatever. Fixed range, it's much easier to pick a range like than to say like, like if I'm trying to grab 2022, I could do visible range volume profile, but then I have to make sure like this candle is all the way off my screen. And then Like I can get like the same. Yeah, just see, I don't even have it set up right because I don't use it. So then it'll match this, but if this is off, even slightly, it's going to affect this. And for me, I don't see a use for it. Again, I mean, if you like it, that's cool. Use what works for you. I'm not trying to tell anybody how to trade. Just going over the levels I'm looking at and going over how I trade. So this is going to be 2021. And personally, like I wouldn't go back any further than that. But if we drop below 2022 and 2021, you can grab further back to get an idea of where we might be bouncing or whatever. So 2021 is going to be a POC because this has been touched since 2021 ended. So the trick I was talking about with the volume profiles, like you can see this is only giving me like 2 years worth of data. If I wanted to go further back, what you can do is use the replay tool and go, to like the end of that first year. And now I have 2 more years of data if I need it. So just a little tip for everybody. You can do the same thing with the session volume profile. So session volume profile gives, I don't know, roughly like 45 days worth of information. If I wanted more, I can just, so you can see here, my session volume profile stops right here. So if I wanted more data, I just use the replay tool and snip it right there. And then it's going to give me, more data, like 30 to 45 days back. And then when we grabbed our our rundown, we grabbed this move here. If you wanted more data, like if you want the entire rundown from highs to lows, you can grab that. Not bad information to have on your chart. I'm not going to be charting this, but you can if you want. So there's that. And then so now this is mostly going to apply to new people, but so when we're trading on 35-minute session volume profile. So right now I'm already, wait, what is going on? Am I losing my mind? Oh, it's because I'm using the replay feature still. I am losing my mind. I'm like, how am I outside of value area? Of the current value area. So mostly for newer people, when we're what's up, billionaire? Sorry, I'm reading your comment, Omar. I mean, it's not really going to matter what I say, Omar, but I'm guessing CPI and FOMC are going to be bullish because they want to get more people into calls and buying shares before they dump it. But that's just a personal opinion. Definitely not trading advice. So for our session volume profile, specifically the daily, if we happen to open above our value area high, which we're kind of close to, and then cross back down inside, that's a very bearish move. And if that was to happen, what you want to see is something like what's happening here, like not quite like this, but like you want to base outside the value area like we're seeing here, where we have, multiple candles closing outside of the value area. And then you want to see price come back inside, and you want to see like three, as a minimum, you want to see 3 5-minute candles close inside. Once you have 3 5-minute candles close inside, you want it to come back up and retest the value area high. And this is where you would buy. If those things took place, you're going to take puts, expecting a rejection down. And in that case, we're looking for the 80% rule to play out, which means 80% chance that if that happens, where we base outside of the value area and then come back inside, have 3 candles close, come back and retest, go short, 80% chance we go from high to low or from low to high. And so that's our bread and butter in Shorty's Discord. This is the trade that we're looking for. You always want to be aware of our POC. Good chance you're going to see a rejection here. Just like this one, we came outside, came back inside, boom, boom. If you went long here, you see like some consolidation, rejections happening here at the POC before it finally did finish and make the complete 80% rule. So that's what I was talking about earlier. If you take, more than one contract, you want to trim here and then leave your runners to try to get to the far side. And that's where you make, major money, is if you're able to leave a runner all the way to the far side. So we're also looking for the inverse. So if we come below the value area low and base a little bit like we do here, and then cross back in, retest, 3 candles close, retest, we're going to take calls, and we're looking for trim at the previous day VPOC and take profit at the previous day value area high, 80% rule. So sorry, I just had like a complete brain fart. Basically, if you're like really paying attention, what we're really trading here is flags essentially. So if this is my flagpole, this is the flag itself here. This isn't exactly a pretty one, but it's going to have to do. I don't know, something like this. This is a bull pennant. But if you've been paying attention to volume, our volume's descending here as we're coming up to resistance. So good chance that we reject here. And we're looking for basically this to come and retest the top of the flag. So our flag would end up looking, something like this. And we're playing down from the top to the bottom. And there's a chance, like, if we extend this out, there's a chance like we reject here and it ends up being a bull flag and rockets up after this, but you're still getting, decent risk to reward just from playing the top of the flag to the bottom of the flag. And if it does pan out, then not only you're getting the top of the flag to the bottom of the flag, you're getting the top of the flag all the way down to the previous day value area low. So hopefully that all makes sense to everybody. And so let's just try to look and see for tomorrow. So I don't have a crystal ball, but I would not be surprised to see 80% roll to the downside. I wouldn't be surprised to see us come up and hit this trend line here and then come back down, retest, and boom. And it could also happen pre-market, but I would expect it to respect this trend line here. I want to check the clouds just to see where we're at on ES. And I'll pop them up on screen if I see anything like, yeah, so far the clouds are agreeing with exactly what I'm saying. Maybe I should have popped the clouds up on screen so you guys know that I didn't say all that and then look at the cloud or look at the clouds before I said it. But so we'll start with the 4-hour cloud. Sorry, I'm going to do this a little bit different. I'm just going to show a screenshot. It's probably easier for me. So this is our 4-hour cloud. Oh, it doesn't show the price levels, but the cloud here is 40.83.28. So since it's not showing the price levels, I'll just bring the clouds up here. And if we look at, 40.83, it's pretty close to this trend line. The 4-hour clouds are open, but pretty good chance we reject here. It could also reject, at the top at 40.99. Clouds are open, so it could also cross through, but based on that trend line we have, I wouldn't be surprised if we reject right there. And then this is going to be our daily cloud, and it's just, more confluence to what we're looking at. The top of the daily cloud is at 40.76 and 13 cents. And the outside top of the daily cloud is at 41.16-ish, 41.17, right around there. So good chance that we hit this and reject down. As far as other clouds, nothing really significant here on the weekly. Monthly, a little bit significant. We have the gosh, why can't I think? I can't think of the name of this right now. I'm too tired. But if you're asking Chris what this indicator is, these are shorties clouds based on, if I could think, that would be spectacular. Elliott waves. No, not Elliott waves. Sorry, I can't think of what they are. I am way too tired right now. But they're it's a custom private indicator that basically you're not going to get access to. So not trying to be mean, but I would go out of my way, like bend over backwards to remember what they're based on, but there's no point because you won't ever have them. So oh, here, I just remembered the name. Our weekly mid is at 42.48 and 74 cents. And this is going to be our quarterly, which really isn't too relevant, but quarterly top is closed and it's at 42.22. So basically, as of right now, at 42.22, and the outside of the upper cloud is at 44.82. Like, we can definitively say right now there is literally no chance for ES to go above 44.82. The only thing that could change that is if there's some news event that happens, but extremely rare for closed clouds to get broken. Normally takes like some major news event to make that happen, basically. There you go. Thank you. Yeah, they're Keltner clouds. They use MACD and some other custom stuff. They also take into consideration price and price action. Thank you, Brexit. I could not think of the word Keltner clouds in that moment. But again, like, I'm exhausted. So I know I forgot to call out some of these levels. It was 2021. 2021 POC is at 39.11 and 28.6 cents. Actually, let me go to a higher time frame. Rundown value area, just in case I didn't say it, 37.74 and 36 cents. Run up value area, 37.63 and 49 cents. 2021 value area low, 36.52 and 62 cents. 2022 value area low, 36.32 and 52 cents. And then I think the only other ones I didn't mention were shoot, I didn't even label this one. That's got to be 2022. Value area high is at 42.58 and 90 cents. 2021 value area high is at 44.0866. Anybody have any questions about ES and what we're looking at for tomorrow? No questions? So again, I'm expecting a rejection right around 40.80-ish. And then you'll want to look at playing the 80% rule to the downside. Or actually, I shouldn't just stop there. So if for whatever reason we break through here and hit this trend line, gosh, I keep grabbing the wrong tool. If by chance we break through here, hit the trend line, come back, retest. I'm trying to see, is there enough meat? Yeah, 12-ish, 13 points on ES or SPX. You can play this and potentially it might break through the trend line, you know. So if we reject at the trend line and retest the previous day value area high, and you start to see buyers coming in, you know, wicks to the downside, you can try playing it long. But really, I think the move, the move we're going to be looking for is boom, boom, retest, and then down. Or at least that's the move I'm looking for. And actually, I should say I'm not going to be trading live tomorrow for people in the Discord, but I will be trading Tuesday live on voice. And I might, I'm contemplating doing a couple of live trading days on YouTube. But I'm going to warn everybody right now, it might be a little bit boring. I'm not going to be trying to force trades or predict, you know, randomly. Like I can predict randomly, like, oh, upside here, downside here, or whatever. But I'm not entering trades when I do that. I'm not going to be calling stuff like that out because I'm not trying to force anything. I'm not going to call out stuff that I wouldn't take myself. So it might be a little slow. It might be a little boring. I'm going to be focusing on trades that I would take, and that requires patience. So now we'll look at NQ. Unless anybody happened to have any questions. We'll start on the 4 hour. I'm not going to do the yearly and all that, and I'm not going to cover everything like I did on ES. 1 month, I will call out the levels. So value area high for November, 12, 0, 29 and 70 cents. Value area low for NQ is going to be 11, 2, 58 and 73 cents. And our POC, so this one here is a POC. You can see price after November ended. This is December, came back and touched it here, so it's no longer a virgin POC. Is going to be 1177. Sorry, 11,771 and 38 cents. Whoa. All right. And let's also, sorry, zoom out really quick. Oh, this actually looks, actually, I don't think, no. Oh, maybe. 3 touches there. 3 touches here. This is a good trend line. Yeah. So that's on the monthly. I wish you could label these. I really do. But so this is our downtrend. And then if we were to go to a lower time frame, you know, we're going to be in an uptrend. So from here, I'm going to go to my 7 days to look at my weekly. And for that one, we do on the 65-minute. So I have an OCD issue. And I'm going to point out something really important. Like a single line on a chart is kind of useless. You always want to look at these as ranges. If you're trying to buy or sell at like, I don't know, let's just say on SPY at 390, good chance it might go to like 389 and 52 cents and then reject there. So you want to look at these levels as a range, not as just a fixed line on your chart. We're looking for more of a range. So. Yeah, we'll be doing it key. I'm not too sure about YouTube. I mean, just based on the fact that I'm thinking about it, I'll probably do it at least once this week. I will be definitely, I'll probably be live almost every day this week in the Discord. So, which is going to be new for people because normally I just let Shorty run the show, and if he's not live, I just trade on my own. But now that he's gone for, I don't know, 10 days or whatever it is, I'll probably be trading live pretty much every day. I don't know. We'll see. I might bless YouTube more than one day. My main issue with going live on YouTube is the delay. I'm a scalper. I don't want people following me into trades on YouTube when, I'm just looking for a few point move and people try to follow me and then they end up losing because they got in later than me or whatever. That would bum me out a lot. All right, so there's my previous month. So from here, wait, what am I doing? This is my previous week. I am tired, guys. So everybody better appreciate the hell out of me doing this. I'm sure you can see how tired I am by all the stupid little mistakes I'm making. Okay, so my previous week value area high is at 11,778 and 74 cents. Previous week POC 11,607 and 80 cents. Previous week value area low 11,572 and 31 cents. So it's not really a vacation key. He had a family emergency and he had to travel to Europe. And he'll be back on December 13th. I'm sure he won't be going, live or trading on December 13th, but he'll be back December 13th. All right. Too good. Class on futures. I mean, I can. So Red Raider, I covered all of it. The link for the YouTube is, like 3 comments above your question. I cover every single indicator that I'm using. I mean, the only thing I didn't cover is, and I'll cover it really quick. I use VWAP. Like when I'm trading during the day, let me just go back to ES really quick. When I'm trading during the day, this is generally what I'm looking at. So I don't have any EMAs or RSI, MACD, none of that stuff. I have VWAP, and you'll notice this is a VWAP cloud. And if you're wanting to get a similar VWAP for yourself, you can find the volume weighted average price. And you'll notice right away, this looks very different to mine. These green bands are massive, but the pink line is going to be the same on both. And when I make one setting change, which is the band multiplier, you change this to 0.13. And as soon as I click OK, you can see that it now is identical to my VWAP, right? Just different colors. So I use VWAP with a 0.13 band. I use my volume profiles. I will have like my developing volume profile up for session volume profile. And then down here at the bottom, I have volume with 20 moving average on it. Just gives you, when you're looking at volume, that 20 moving average will just give you an idea of if volume is higher than average. And then, you always want to look at, things like this. Like here we have volume decreasing, right? And then when you're coming up like, whoa, what did I just do? Um, so during this whole time, price is moving up. I completely screwed this up, but that's cool. But then volume ramps up, and so we continue to the upside, and that's not what I was trying to show you guys. But what you're looking for is like volume decreasing, and then you're looking to grab God, I'm not finding a good example at all. So we're looking for volume anomalies. So I don't think I'm going to find a good one right now. Oh, well, I'm over it. I don't know why I can't find a volume anomaly right now, other than probably the fact that I'm exhausted. But so what you want to look for is, like when price is dying down. I hate that this switches to auto every time. When price is dying down, you're going to be looking for a reversal. So it doesn't matter if price, well, actually, you want to see like price going up, volume going down, and then you want to see like red volume start to build up, and then that's when you're going to be looking to get into puts. More specifically, if you're coming up to like a point of resistance, and then the inverse would be price going up, volume going down, and you're coming up to coming down to, I should say, a support level. You would be looking to buy there. Yeah, I think we're going to get another bullish push, but again, that's not financial advice, and that's just a guess. And I wouldn't be taking calls, going into CPI or FOMC. That's just a guess. So anyway, let's go back to NQ here. I really hope I'm not botching this whole thing. Like, I'm super exhausted, and I apologize. But I wanted to get a watch list, something, some kind of levels for people for tomorrow to look at. So we've done the monthly and the 7-day or weekly, whatever you want to call it. From here, again, I drop down to 30 minutes, and I'll be looking at my session volume profile. My focus is going to be the previous day. And oh, before I talk, I should show you guys. I still haven't looked at, whoa, why did that happen? I still have not looked at NQ's clouds. So. And I won't be until I tell you what we're going to do tomorrow. And then I'll show you guys the clouds. So previous day, value area high. Whoa. Yeah, so same thing. I'm thinking we're going to be doing something similar to ES. November value area high is going to be a rough level to get through. Um, it took like this crazy bullish move from news to break through it. And even then, we weren't able to stay above it. It came back down. Here it became support a tiny bit, got broken through, became resistance, back to support, choppy, 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 support again, broke through, resistance, 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 broke through, support, and then boom, massive candle down. I think, I know this was driven by news as well, but this is proving to be a strong level. It's a strong level here. Based on this 30-minute candle, this is a big wick down from tapping it. So if we see upside tomorrow, I'm expecting a rejection, here, trend line and November value area high. And same thing, we're going to be looking for same move as ES, where it would be great if I could grab the right tool. Look for that rejection, come back inside, retest, go short here, and your first price target is going to be the POC. Second would be the previous day value area low. So that's what I would be looking for on NQ. Let's take a look at the clouds, and I still have not checked them. All right, so top of the 4-hour cloud, 1200 or 12,029 and 7 cents, and the tippy top, 12,097 and 3 cents. Want to see where that lines up as far as this here. Sorry, my brain can't even function right now. 25. Yeah, so we're right in that area. So yeah, definitely looking for a rejection there. And let's look at the, sorry, I should have maximized this for you guys so it's easier to see. So here's the 4-hour clouds for you guys. It's open. So price ultimately could break through it, but it's difficult to get through. Clouds are close to the downside at 11,660. This is going to be our daily cloud. And you might notice here, so it's 12,083. Our trend line was at like what, 12,088, I think. So this lines up with what we're seeing as well. Daily mid is at 11,622. This is going to be our weekly cloud, and we're right at the weekly mid. This is difficult to break through. I mean, you can see we've already come up once and tested it and rejected down, and we're now testing it for the second time with a wick to the upside and to the downside. So the mids are difficult to get through. You can see it here, boom, down. Or if we're coming from above, hard to break through. We bounced off of, bouncing here again, multiple times. Takes a lot to get through it. So yeah, same thing here. So yeah, this is just more, confluence with what we're looking at, right around that same price level. And then This is actually a different picture. Um, Actually, no, it's not a different picture. This is a good picture. So with the clouds, you're always looking for touch, retest, go long. And if we look here, um, this is our touch, and now we're looking for it to come back down and retest and bounce. So uh, this is aligning with what we're seeing, like more downside here for our retest and bounce up. And this one's kind of pointless to look at just because it's the quarterly cloud. We're right in the middle in space, basically. The top's closed, but it's pretty far away from where we're trading, a few thousand points. So not really relevant. When we're close to the quarterly clouds, they become super, super powerful levels. The higher the time frame, the more powerful the cloud's going to be. So. Any questions on NQ? Hector, I got one wrong. Previous day value area low to be the previous day value area high. I certainly did. Thank you. So tired. Oh, actually, Darlock, that's Darlock Music in YouTube is bringing up a very good point. This comes down to like psychology. Like we associate red with like whatever, hot, bad, anger, just a lot of negative emotions come along with the color red for most people. It could also be considered like, sexy, a sexy color. But when you're trading, having like red candles on your chart can actually impose fear into you. Like if you're going long on a trade and you start seeing even just a few small red candles, that red can really mess with your psychology. So I like to use white and blue. It's 9:34 a.m. I'm on the West Coast, bro. But I work night shift at a hospital on the weekends, Friday, Saturday, Sunday night for 12-hour shifts. And that's how I manage to trade basically Monday through Friday. People that dive into like the psychology of trading will even argue that it's better to just have one color and not have two separate colors. And that way it's harder for your brain to recognize patterns as far as upside and downside. When you're in a trade, like for instance, if all of your candles were white and a couple of red candles came in, you wouldn't notice it as quickly because all of your candles are white. And then while we're talking about psychology, and when I say this, it's not intended to insult anybody or anything like that, but amateur traders will use like percentage or dollar values for entering and exiting trades. So if you're like entering a trade and you're looking for 20% profit and a 10% stop loss. Oh, Big P, I use the 1 hour. So yeah, if you're using like, whatever, 20% profit, 10% stop loss, you have one thing correct, which is you're always wanting to shoot for 1 to 2 risk to reward. So you want to risk $1 to make 2 in every trade. But more importantly is you want to use points on your chart. Like let's just say, for instance, I was going to go long here on NQ. So if I'm going long here, or actually, we'll even make it smaller. Actually, no, we won't. We'll save it to here. I wouldn't go long here. Or actually, yeah, I would. I would take 20 some odd points on NQ to this line here. But what you want to do is you want to actually use like the long position. And so my points on my chart, I would want my stop loss to be like, I'm looking at this candle here. If they were able to bring this all the way down to here, there's a chance they bring it down to there again. So I want my stop loss to be slightly below that so I don't get stopped out, you know, by stop loss hunts. And then my take profit, I need to be making 2 at least for every one I'm risking. So you can see my risk reward ratio here is 2.93. So it's almost 1-to-3 ratio. So if I'm entering long here, you know, again, I want to be slightly below this candle or whatever it is. Like you might say, oh, I'm going to stop out at VWAP, or realistically, you should never stop out at the top band. You would want to stop out slightly below the lower band. But to do that, then, you know, my profit becomes all the way up here, right? So whatever the trade is that you're entering, you want to make sure before you enter the trade that the risk to reward is there, right? So stop loss slightly below, in this case, slightly below the low of this candle. In case they do another stop loss hunt to the downside, I don't want to get stopped out where they already brought price before, right? So we can throw a line here so we can see, you know, like my my risk is slightly below this, right? And my profit taking is going to be my previous day value area high. That's where I'm shooting for. And with that, I'm almost getting, you know, 1-to-3 risk to reward on this trade. And this is how you want to trade every single trade. If you're looking, you know, to enter short, you want to make sure, like, for instance, I talked about this, but I'll draw it just like to give people a better idea of what I was talking about. If this is my previous day POC here, I'm not going to want to enter, you know, short at the value area high, because there's a good chance that we reject there or bounce and, you know, I'll get stopped out of the trade. Because just as an example, you know, to take this trade, as a minimum, I probably want my stop loss slightly above this candle here, right? And that means I'm getting 1.5 to 1. So the risk to reward is not there on this trade. There's not enough meat on the bone. There's not enough meat on the bone for me to go short there if my POC happened to be right here. So you want to always plan out your trades. Actually, like, the best thing you can do as a trader when you're starting out especially is draw these levels. Everything that we've gone over today. I know I didn't go over fixed range volume profile for NQ, but you should. I'm just getting tired. I need to go to bed soon. Actually, I'm past the point where I need to go to bed. I have to get up in 6 hours. So, and I apologize. This took a little bit longer than I expected, so I'm not going to do any requests or anything. I'm just going to do ES and NQ. But even with those two, like, you can trade ES, you know, like you could trade MES if you're doing futures. You can trade SPY off of your ES charts. You can trade SPX, and you can trade NQ or QQQs. Or even any of the inverse of those if you wanted to, I guess. So I don't know what I was saying, but yeah, every single, I do know what I was saying. I apologize. You want to look at these levels, and, like, if you need to, you know, you can write the night before, like, short on retest. And so you know that if you come to this level, or even better, if you base outside of it, like we were talking about, and come back in and have 3 candles close, retest this level, you want to enter short here. So this is your planned trade for tomorrow. Okay, tomorrow if we, retest here, boom, I'm going to take it short. Or let's say, like you want to try to go long at the previous day VPOC. Like you could type in, long on retest, but I actually wouldn't. I would probably short the retest of the VPOC. It'd be great if I could spell as well. But so as a newer trader, this might seem like inhibiting, and it is a little bit inhibiting. But if you literally say like, oh, where do I think is going to happen if we come to this level? With this trend line here, I'm pretty sure we're going to reject, retest, go short. And if you do that for every single level on your chart, like what your plan is at that level, and you only take those trades, I think you'll notice a massive difference in your success rate versus randomly entering, short and long at levels. Because when the market's live, our psychology changes and the way we look at charts change until you're at least like, until you get more experience where you're able to look at live charts and not have it affect your psychology. If you have a distinct plan of what you're going to do at every single level, you'll notice a very, very different outcome in your trades. And with that said, there's always, a good, depending on your trading, 60, most people will have like a 60 to 80% win rate. So you have to know at minimum, like 20% of the time you're going to be wrong. Possibly 30, 40% of the time. And for some people, maybe even 50% of the time. 50% is not great, but if you're at least honoring that 1 to 2 risk to reward for every single trade, you're still going to be profitable. And so it sounds easy, but it's not. And I know it's not, but you really have to get past that psychological barrier of like cutting your winners early, letting your losers run too long. Like you need to honor your stop losses. You need to honor your take profit zone on the chart. I would say the only exception to that. So let's draw like a long position on the chart. If I was to enter long here, right? And let's just say my stop loss is here. Okay. And let's say price does this. I enter here, price dips down a little bit, and then we come up and we're getting a pretty nice move. And let's say at this point here, I'm up 70% on my trade. Is anybody going to let a trade that's up 70% go here? If you're saying yes, I don't know, like close your account, please. So this would be the one exception. If you enter this trade, right, and it comes like you enter here long and it comes up and then it goes down and then it comes back up and then it goes down and boom, your stop loss gets hit. This is a good trade. It might not feel good in the moment, but you followed your plan. Even though you were green twice, you never hit your take profit. If this happens, boom, 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 you should have exited here, somewhere around here. The reason being, at this point, you were up 70%. You should never let, 70%, not percentage as in the trade, like being up 70%, but you made 70% of your goal, okay, from your entry to your take profit. And at that point, like your stop loss should be moved to like either break even or slightly above break even. So at this point, like, you know, your stop loss was here and price makes it all the way up to here. At that point, grab your stop loss. I mean, however you trade, I don't know. Some people can drag their stop losses. Some people have to type it in. Put it slightly above break even. And that way, if it does come back down, you get stopped out. Cool. You didn't lose money. You didn't make money, but you didn't let a trade that was, you know, 70% to your goal go red. But more often than not, you know, like at this point, you'll probably get this move to here. You will get stopped out here occasionally. But if you do this consistently, more importantly, if you do this consistently, enter long, comes up, boom, stop out, cool. This is still a good trade. You followed your plan. If this happens and you take profit, boom, great. You followed your plan. Even if you're doing this 50% of the time, you are profitable. If you're doing it 60, 70, 80% of the time, you are banking. And all you have to do is just follow your rules every single trade. And as long as you do that, you'll be right more often than you're wrong, and you're taking double the profit that you're risking on every trade. You're going to be profitable. So this is super, 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 like this is the most important part of trading, like no question. Yeah, it does hurt, Key. It certainly does, but you can't let it affect you. Let me see if there's anything else I want to go over. I'll just open up to questions really quick. I need to head to bed, everybody. I apologize. I was planning on covering more, but this week we're going to be doing probably a significant amount of watch lists, I want to say. And we'll do some classes on volume profile, market structure. I'm going to try to cover a lot because we have a lot of new members in the Discord. Sorry, Joshua, what do you mean by how often does it go further? Are you saying further down or further up? T-Lump, I can't really answer that. Like, I'm not sure how you would go about that. I use volume profile, and for every trade, you know, I plan it out with either the long tool or the short tool. And I'll figure out, you know, where my take profit is and where my stop loss is going to be, for instance. And I trade in Thinkorswim, and I just, you know, match up the prices. I'll put lines on my charts. And then like once I have, you know, like if this is my stop loss here, once I have that line on my chart, I can put a limit sell order, or sorry, like a stop limit for stop losses, and it'll put a line right there on my chart so I can see where my stop loss is. Yeah, I still don't know what you're saying as far as how often it goes further. Further than 70%? I don't. I'm literally saying based on testing, like if you don't get 70% of your move, then you let your trade stop out. Either either you stop out or you hit your profit target. You don't move your stop loss up until you hit 70% of your move. And that's based on testing. So I mean, everybody's different traders, Omar. So like, I'm a scalper, so I'm in and out of trades very quickly. Sometimes like I've had trades that have lasted like 3 seconds. So I think most people, like newer traders, and like you can look inwards and see if this lands for you. Most like newer traders or people, even with some experience, generally will cut winners early, for either like minimal profits or a little bit of profit, and they'll let losers run way, way, way further, hoping that it'll turn around and go in their favor. And you need to do the exact inverse. You need to let your winners run and not be afraid of it going red if it does and getting stopped out. And you need to cut your losers as soon as they hit whatever your planned area is on your chart, your stop loss. Yeah, stop only goes to break even. And actually, I don't do break even, Alan, because like I use TOS and I have fees. So I go slightly above break even, like $2 or $3 above break even. It makes me feel good inside that it still ended up being a slightly green trade. um, but and then I'm not losing money to my fees, if that makes sense. Oh, okay, Joshua. Okay, that's cool. Yeah. So I mean, I think that's going to do it, everybody. Again, I apologize. I know it's a little bit shorter as far as looking. We didn't get to look at a lot of charts, just two. But I was trying to teach as well as go over the charts at the same time. But like I said, we're gonna. I'm pretty sure I'll be doing a watch list Monday night, and we'll do a watch list on Tuesday as well, I'm sure, and probably do a class and a watch list on Wednesday. And probably again do a watch list on Thursday. So it'll be a pretty packed week of watch lists and classes as well, so we can get some people up to speed. Anyway, hopefully this helps some people out, and best of luck trading tomorrow. I'm not really going to be on. I might be on a tiny bit, but not much. So that'll do it. All right, everybody, have a good day. Thanks for tuning in. I appreciate all of you. And yeah, I hope it was helpful. I know I'm like super tired, so I'm a little bit concerned that I might have been mumbling or ranting on about absolute nothingness. That is very much a possibility, but I had an insane night at work. A lot of really, really sick people right now with cold and flu and COVID. And I don't know how many people know this, but I'm a respiratory therapist. And so when you're a respiratory therapist doing cold, flu, and COVID season, you end up running around like a chicken with your head cut off. So my head's kind of spinning right now, if I'm being honest. Key, you'll get there, bro. Like nobody, I'll just touch on this really quick. Nobody is learning to trade, like, and be consistently profitable. I would go out on a limb and say within a year, probably even 2 years. If you have like a mentor, you could probably be consistently profitable in like a 1 to 2 year time frame. I don't think prior to a year though. I mean, to every rule there's an exception, but not very many. It takes time and practice and screen time, and and then it's constant practice and screen time, and getting over that psychological stuff is rough. So yeah. So anyway, that'll do it, everybody. Again, I hope I didn't ramble too much. I feel like I did, but I'm exhausted. Anyway, much love like always, everybody. Take care. Have a good day.
Thank you.
Thank you. Good luck tomorrow trading. I'll post the charts in the Discord so people can see them. All right. Take care, guys. Bye.